Joining me now is 42 Macro founder and CEO Darius Dale. Darius, what's your outlook for the year? And also, I want to get your reaction to what you heard from our new Treasury Secretary there in his interview with Larry Kudlow.
Well, good morning, Cheryl. Thanks for having me. So I've known Scott for a long time. Really brilliant guy. He's going to do great things for our country. The thing I will say is that this process that they're doing down in D.C. as it relates to trying to jam together tariffs, deregulation, tax cuts, energy production, and the rest of it, it's causing a little bit of a slowdown in the economy. So we're hopeful that we can get the legislative agenda on track here in the coming months so that we can actually, see the economy and markets accelerate from here.
How concerned are you about tariffs? Obviously, we have a stay, if you will, for Mexico and Canada. That was 30 days put into place, but the 10% tariffs on China did go into effect. Does that concern you at all?
No, well, not in the traditional Wall Street economist sense. We're not a very open economy when it comes to trade, so I'm not too concerned about that. Why tariffs matter for the market is because they traditionally wind up with U.S. dollar strength. And U.S. dollar strength is a direct negative influence over global liquidity, which itself is positively correlated to asset markets. So the more tariffs go up, the more the dollar goes up, the more liquidity goes down, the more the markets start to struggle.
Yeah, no, and I think a strong dollar is something that President Trump wants to see. Let's take a look at yields right now, because Scott Bessent also is agreeing with the president's push to lower interest rates. Watch part of this.
The president wants lower interest rate. What he sees, in my talks with him, that he and I are focused on the 10-year Treasury and what is the yield of that. So the purpose of lowering interest rates is to lower interest rates. So they did a jumbo rate cut, and the 10-year rate went up. Despite the growth estimates going up, 10 years coming down, because I believe the bond market is recognizing we cut the spending, that we cut the size of government, we get more efficiency in government, and we're going to go into a good interest rate cycle.
But probably no surprise to you, Darius, some Federal Reserve officials are claiming that Trump's economic policies have risk. Chicago Fed President Austin Goolsbee, who, by the way, started his career working for Barack Obama, and Richmond Fed President Thomas Barkin both say that Trump's tariffs could be inflationary. It will impact supply chains.
That's false. The tariffs are not inflationary. They are a one-off price level adjustment, and that typically results in slower economic growth. So I disagree with those views. In my opinion, those views are quite politicized. But I think we need to get back to the broader discussion as it relates to interest rates. The only way you're going to get a sustained decrease in interest rates on the long end of the curve is if we get our fiscal house in order. And as much as I applaud the efforts of DOGE, it seems like they've ring-fenced several very large categories from this process. If you think about Medicaid or Medicare, Social Security, national defense, and obviously the net interest on the debt, that's about 60 to 65% of federal expenditure. So they're going to have to take a gigantic chainsaw to everything else in order to actually achieve some deficit reduction, especially in the context of extending and expanding the Trump tax cuts.
Interesting. Mark Tepper, jump into this.
Yeah, I agree with Darius. I mean, tariffs are not inflationary. As a country, we generate roughly $25 trillion a year of total personal income. The total value of the imports of goods into our country is $3.3 trillion. So even a 25% tariff across the board on all goods would only equate to roughly a 3% tax on Americans if you consider worst case scenario. So it really isn't as bad as a lot of people are trying to point out. And when you go back to Trump's first term, Darius, I mean, you look at the tariffs that were placed on solar panels, on steel, on washing machines. Domestic production actually went up in response to those, and prices did not go up.
Yeah, well, that's the goal, right? We're trying to reshore manufacturing jobs back into the U.S. by creating several policies. One, you want to put up a wall with respect to tariffs. Two, you want to deregulate so that you incentivize companies to actually invest. And you also want to lower corporate taxes, which also further incentivizes companies to invest. There is a path to a very, as Trump likes to say, a golden age for America here if they properly adjust and calibrate the policies relative to each other. The fear for asset markets is that they may not, and that's something that we have to figure out as investors.
All right, Darius Dale, it's always great to talk to you. Thank you for being here this morning.